On September 11, 2001, myself and my colleagues woke up and went to work in the city where we own multiple buildings up and down the city. But in the Midtown, we had a cluster of building that we called the campus. We liked it. We were proud of it. We could walk down the street and see our friends and colleagues. It was good. But within a couple hours of that day, everything totally changed. Our risk assessment of our firm went from a square to a cube. And in that cube, our holistic view of ourselves was that we now didn't have a risk assessment, we had a threat assessment. And we had to move quickly and forcefully and spend money to completely revamp the entire firm to eliminate what we perceived as a threat. And we did. And it's my opinion that on Liberation Day, the asset managers of the world, and that includes sovereign funds, countries, individuals, family offices, their entire risk assessment of the markets completely changed. It now became that where for 80 years, America was considered the safest spot, it was now called into question. And because of that question, people then are starting to make decisions on where their money should be, okay? So money in the world, capital, buyers of equities and bonds, it's not monolithic. We have day traders, we have hedge funds, we have private equity, we have sovereign funds, family offices. Everyone's different. Most of us are all wrapped up as that surfer. That's us. We're not determinant of the market. The markets are determinant of the major asset managers. We're talking people with hundreds of billions, if not trillions of dollars that they invest and they move around the world. We've done videos on the 4 buckets. You invest in Europe, America, Japan, or China. They're the 4 buckets. There's no more, okay? And so people make their choices on what they're going to do. So when we're looking now at what's going on in the world, even with all this stuff going on every day, the last 10 days, the tit for tat, again, more news out of the administration today, reversing themselves, I would caution that we should not really pay a lot of attention to that. It's too short term. They may say we're not going to tariff this or whatever, but the big money is not watching that anymore. They already had their 9/11. They've already had it. So their new risk assessment involved how can I move out of America to a degree? Because remember, we've done a couple of videos that last year, 74 cents of every dollar invested in the world was invested into the US markets. And we're only 28% of the GDP of the world, okay? We're huge, but we're only 28%. So now, as they're moving their money around the world, what we want to understand is where are they going? Do they know where they're going? I would argue they don't at this time, but here's what we can see. The dollar's going down. We talked about this the other day. So they're not selling the dollar because America is a terrible country. I believe that they're moving out of the dollar because of the uncertainty of the safety of their assets in America. So that leaves them with 3 buckets, right? They can go to the euro, they can go to the yen, or they can go to the renminbi. The yen, it's racing up, just like we would anticipate. The euro is racing up. Makes sense. The renminbi, I would say, is kind of flat. It went down and it kind of reversed itself. Again, it's a closed system or semi-closed system, so it's kind of hard to ascertain. But we can see that so far that the money is moving into the yen and the euro. But when we get in times of great uncertainty, we have these things which I think of as, let's say, quasi-currencies, all right? So this is where money goes when they're very unsure of what currency to choose. Because when you look at the four, China, Europe, America, and Japan, we all have our issues. They're different issues for each country. And so people are making valued decisions based on how they look at those issues, okay? And even with the four to choose from, it's not enough. They're kind of like, where do I go? So the first quasi currency that people run to, I believe, is gold. Now, gold's been trending up over the last 2 years. It took a hit on the 2200 down day, but I feel that was selling a winner because they have margin calls to meet. And since there, anyone watched it last week, it's been a rocket ship. And Goldman Sachs came out today and said their new target's 3,700. But believe it or not, at least in my career, other people can speak to this, is that the Swiss franc is also considered a safe haven. And as you can see here, it is exploding up. It's up so far, as we said in our video last week, that you have to pay the right to buy the Swiss franc. So last time we looked, it was around 28 bips. I don't know what it is today. So in other words, when you buy the currency, you usually expect to get an interest. Well, guess what? No, you're paying them interest to buy their currency, all right? That's how much in demand. All kinds of issues. We can do a video on what happened to Switzerland in the past when this happened and wild stories. But right now, they're racing into the Swiss franc as quote unquote a quasi safe haven currency. And of course, the last thing we have is Bitcoin. Now, Bitcoin has moved up. Well, it was 85. I think we're down to 78, 77. Now it's back up to 85. A couple ways to read this. I always believe that Bitcoin is just a function of liquidity in the market, all right? And so my opinion is that we still have good liquidity. And I'd also say that notice the Fed has come out and said, look, the markets are moving around, but so far the stress is okay, we can handle it. And of course, the number one reason is they have not announced a new facility. Remember when we lost the 3 banks, we came up with BTFP to help the banks with the liquidity. There you go, a facility for what's going on. So what I would say for these quasi-currencies is this. Watch what the Fed does. If the Fed announces a facility, then we can look at what they're doing. What problem are they trying to solve for, all right? But until they do a facility, if they do one, we don't know, right? We'll find out only if there's an issue. So this restructuring of portfolios brings us into an area where, we have to watch things. So one, we have the basis trade, which is based on the treasuries. The treasuries going down, causing issues with the basis trade. Is that causing some of the selling? We don't know. We'll know when they write the papers. The second thing is the yen carry trade. We have at least some aspects of the yen carry trade seem to be happening. One, the first thing you do when you unwind is sell your US stocks, sell the dollar, A, B. C, buy the yen, happening. D, pay off your loans that you borrowed against the JGB, and then sell your JGBs. But the JGBs are up in price. So we don't do full circle on unwind of the yen carry trade, but we're close. Also, we don't know this. Are people buying the yen? So the yen carry trade is unwinding somewhat. Some asset managers are selling it, but other people are buying the yen as a safe haven and buying the JGB, so they're offsetting each other. You have to make up your own mind on that. What we do know is that they're not buying the yen to buy the Nikkei. The Nikkei has been getting hammered, all right? So, the money flows are twofold now. One, asset managers reallocating across the globe, and then everyone else flip-flopping back and forth on what's actually happening. I would not follow the flip-flop. I would follow asset managers and where they're going and why. What do you think? Tell me in the comments and like and follow. And thank you for following me.